Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein with your end of the day metals report, and this is for Thursday, the 27th of July, 2017. What a crazy day we had. Stocks all over the board. One of the things in my updates to my clients that they were warned about today was that we have a massive amount of earnings coming out, and it created chaos in the market. Amazon's earnings really hit the tech stocks. You can see how you went down from the high to the low, nearly 150 points in the NASDAQ. That's a big move by any stretch of the imagination. The Dow up strong because of earnings that affect the 30 companies that make that up. And the other indices, they were torn. They didn't know what to do. In the metal markets, I warned you yesterday how the charts were going to look. And I said that because they settled the markets in the metals, the settlement price at 12:30 Central Time, 1:30 Eastern, and they trade to 4 o'clock, you had a late day surge in price, but that surge came after the FOMC meeting. Prior to that, the metals closed lower, and it's going to make the charts look strange, and it's exactly what occurred. In fact, I gave a lecture about that today in our office to a bunch of people. You can see what's going on. This is a weekly chart of gold, and the red line is your 18-week moving average of closes. You've traded to 1295, 1205, and you're sitting here anything, let's call it that 1250 areas, halfway in between, and that's what you're caught at right now. For the week, we're still up $5 on the week. Now, when we go to a closing chart, and this is only settlement prices, you've gone from 1220.40 to today's settlement of 1266.50. It's a nice rally, $46. Nothing stellar. It's a $46 rally in the market. You certainly broke more than that when you came on the way down. And this rally, if you really look at it from, let's call it 1220 to around the 1310 level, we're almost about halfway up on the rally point. The market has been able to clear a resistance hurdle right in here. It got there yesterday, failed, if you'll look, closed lower, and today you took out yesterday's high. Now, when you take out the high of an outside day down, and this was yesterday's outside day down, why is it called that? Because you took out the previous day's high, low, and you closed lower on the day. My rule is that you set up what's called a bear trap if you take out that day's high. And what I look for are one of the key moving averages that I teach in my course. Now, I don't give you all of those numbers here in these videos. They're certainly in my subscriber videos. But suffice to say, I look hard at what the swing line is doing, and that's this brown line, and I've showed you that over and over. And how's this? I don't know that this is a real swing line low. I don't know what that is because you did take it out in theory when you broke down yesterday. Because you made the higher high today, the way it sets up is that is the proper number, but because it was violated, I have little faith in it being the true swing line. When I look at what happened, because you've got the 18-day average here and the 100-day moving average of closes here, neither of those key averages could be an upside target. What could be the upside target if you take out the high of an outside day down? It could be the Bollinger Band. And when I put on the Bollinger Band, that number comes in at 1272. You missed hitting it by 70 cents, and then from there you fell back $5. What else do I look at? Are you embedded, overbought, or what? Now let's discuss what that is. This is how stochastics typically move. They'll go from up to down, try to come back up. Sometimes they stall at a midpoint. But when they embed, they do that by getting both the red and the blue numbers closing over 80 several days in a row. And when that happens, the market has changed itself from being overbought to locked into a trend. It stays that way on my theory until the red line closes back under 80. Got that? Even then there's a rule, and we'll talk about it when we see one of them happen, but that's the rule. That tells me that on breaks, the pros will continue to buy the market until you lose the momentum or you get back up to that Bollinger Band that you haven't hit at 1272. When we look at the ETF GLD, you've got the same thing. You have an embedded reading. The objective is 120.46. You got today to 120.14. Didn't quite make it there. Yesterday's high in the market, and we should take a look at that if I can get this to work. Sometimes it doesn't like to cooperate. Let's see if I can get it by coming off the chart. There we are. Yesterday's high was 120.15. You had an outside day up. Very different than the futures. Do you know why? Because properly they close this market when the market's finished trading, not at a midday price and then they go the other. And I know people are going to say, well, hedgers have to do this and that. Nonsense. People are using the ETF in a big way too. I don't buy that theory. So in looking at it, you just missed hitting it. So we still have an open objective of 120.46, and I say the pros will buy this market until you lose the embedded reading. On the GDX, what we have is a market that's got a pattern of a lower low and a higher high. And as I told you the other day when the market did this just yesterday, the question is the market going to, let me see if I can get that to come off of here. I'm going to change the battery on this in a minute. The question is, the market's over the upper Bollinger Band. This is yesterday. Is it going to push that band out? Or is the market going to fail and pull back right within it? That's going to be the big question. And it was answered today. It pulled right back into it. That doesn't mean the band can't widen a bit, but you're not in an overbought situation. If you take a look yesterday, one of the numbers closed under 79. See that right here? Nah. So you're not overbought. You're not embedding. You're just overbought. And I still say that the mining stocks were leading the futures. So this market's in what we'll call a pause in an overbought area into resistance. The gold-silver ratio saw a low close yesterday going from 78.38. So you needed 78.38 ounces of silver to buy 1 ounce of gold. It dropped to 75.63. And today it lost back about 30 cents. So you need a bit more silver to get that ounce of gold. Why? Because unlike the gold market, which is embedded, you don't have an embedded reading here. You've run up to the upper Bollinger Band. That number's 1676.80. You got to 1681, and bang, you ran into a wall, and you finished the day at 1657. If the traders in this were in it from anything I taught them, that's where they'd come out of their a chunk of their position, if not all of it. That's up to how your own methodology is against that upper Bollinger Band, and they're waiting to see what happens with the overbought condition. They may have even said, goodbye, I'm done. Now, in the copper market, we have 3 days in a row over the upper Bollinger Band. Here's the teachings first of Bollinger Bands, that you only spend 5% of the time outside of the top black band and bottom band. Go back on your algorithm, you'll see it will adjust to that. What is that 5% if you try to figure it out? Is it 3 business days, 5 business days, 7, 10? Could be any number. I've done studies, and my studies have shown me, and this is how I'm going to use them, you can do whatever you want, just go back and count on different charts, that if you apply one of those percentage points to each one of those days, you have a good rule of thumb. Is it exact? It is not. And that's because it can go to 7. I've seen some go beyond that, but not many. I'm looking for the rule of thumb, because if you play what the norms are, you're better off than playing for the extreme. You know not to be short the market. You're over the 18-day average. You got the swing line up, and you got an embedded reading. But is this the spot to buy, or do you think it's going to pull back? That's the question, and my guess is you got a 2% chance, rule of thumb, of staying over that top band. In the platinum market, you have a market that's refusing to get up like the other markets and challenge its resistance. And this time it's a combination of the 100-day average and upper Bollinger Band. If the market gets under 919.80, believe it or not, it could throw out an all-out sell signal looking for back to the 895 area. Remember, you're overbought. If you get under that number and don't take out 943.60, you'll have lower highs, lower lows underneath the 18-day average. Could be an all-out sell signal in the market. In the palladium market, This market was an all-out buy signal when it crossed this high, and finally, and I think I pointed this out to you the other day, and believe me, I'm not throwing out buy here, sell there. That's not what I'm saying. I'm saying via the setups what the market's doing, that's all. If it got through that high, one of the potential goals is the upper Bollinger Band, which it hit today in an overbought condition. So I think the pros are, again, taking money off the table. That doesn't mean the trend is going to change just yet. You're overbought in an uptrend in an overbought condition that hit the upside target. In the dollar index, got to be careful tonight. What if you get over with this red line 20? You had a late day surge in the dollar where you closed up 21. Now, frankly, I say late day. It happened a lot earlier than that, but it held on to the gains. I cannot say I'm surprised. Look at the low of the Bollinger Band, 93.10. What was today's low? 9,300. Now, for those of you that get price counts from the Linn Group, 9,300 was our third price count. It hit it today as well, and if you're on our mailing list, you got that in the mail early this morning, and that could be why you're going to get something of a correction in some of these currencies right now, so you got to be a bit cautious. You put it all together, you try to come up with a game plan, and you try to come up with numbers, because we get a lot of people that swing during the day. You know, you ever ask yourself, how do the pros figure out maybe where they want to buy and sell? There's many different ways to do it. One of the popular ways that I've learned over the years is this formula of pivot points. And believe me, there's nothing secret in the formula. We all know the formula, have it the same way. The difference is some people can use 2 buys under the market, these blue lines, 2 sells, and I've seen FX traders carry them to 3 and even 4. There's different ways you can take the formulas, but the most popular is the one that we're showing right here and the one that I'll teach you. And I teach it in 2 videos. They're yours free. You can either call us or go to our website. You'll see a carousel of free offers. You want to get the pivot points. You can click right up here at any time as well, by the way. If you're watching me on YouTube, just click that icon. The forms will appear under here. It'll say click here for Ira's free offerings. Do so. I'm Ira Epstein. I'll see you in my next video.